All right. So this next study is of a stock, and what's interesting about this study is that he starts putting it together with the PNF, and that's what we eventually want to get to is being able to coordinate the Wyckoff methodology in its entirety, meaning bar chart, wave chart, figure chart, and using the position sheet. That's how it's done. All right. Um, and I mean that's just the requirement. I'm I'm not even adding all of the other bells and whistles, but that's just like the core requirement for this methodology. All right. So our next study begins with Anaconda in a small trading range where it breaks out and increased volume. So that's right here. This is the stock at that time, Anaconda, and it had a breakdown on increased volume where it says HV means what, a breakdown on heavy volume, blah, blah, blah. Everyone understands this. It's a range and a break, right? Heavy volume validates the break. All right. Now it goes down, down, and pressure continues with no signs of rallying power. When we see an evidence of a selling climax, so basically go straight down, break, 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 break. And at point D right here, you have a high volume climax. That's important. Why? Because you want to see the behavior after that to see if the climax is passed, has liquidation stopped, etc., etc. All right. So, what do we see? We see evidence of a sudden climax in an abnormally large volume accompanying a sudden sharp acceleration. We conclude this that demand is overcoming supply. Why? Because who's taking the other side of this volume? You know, one side selling, the other side is buying. So one side is panic selling, and the other side is buying, and that's why demand is overcoming supply. And with the stock in an oversold condition by virtue of its drop, we may at least expect a technical rally. So you ever heard of that what is it, climax automatic rally or something like that, right? So the difference is Wyckoff just called it a technical rally. Automatic rally is what you hear, but it's the same thing. It's a technical rally. If we keep records, we would know that there was heavy congestion at this level around 14 to 17 formed during 1933. Also, there was support point around 10, which was the low point reached. Okay. So all he's saying is that in the previous history of the stock, there was a congestion area and a support point in 10, and that's where price went to support. All right. With this background as a guide for us, we can hardly expect an enduring advance to develop out of a selling climax without preparation. And this is really important. You want to see some type of preparation. Now, preparation doesn't mean go use the schematic with that really long phase A, B, C, D. That's not what I'm talking about. I mean, it's just a base with a count, and that count has a projection, and that projection is good enough for a significant move, and if you get in, should have a good amount of reward to risk. All right. That is given consider. All right, number of buyers who will okay. Forget this. All right. So if they plan a bull campaign, they will wear down the overhanging resistance by allowing the stock to remain sluggish and depressed. The whole point right here is that look, if you have a lot of people trapped, it the move is not going to happen because the bounce when it occurs, the trapped buyers will sell. So you have to understand where are the trapped buyers or sellers. An experienced operator knows that he can most easily force the public out of the stock by allowing it to remain dull and weak for a significant period of time. There's a couple of ways to get people out of the stock. One is the panic selling that already occurred here that got a lot of people out of stock. The other way to do it is just to go sideways for a long period of time where people just give up. All right. Most market followers, at least the less informed variety, are notoriously impatient. All right. They crave action, aka day traders, by the way. Seem to think the stock ought to go up immediately merely because they have bought it. Yes, day traders. Especially when a bull market is developing or well underway, there may be such people constantly jumping into anything that gets active. day traders. The tiring out process is very effective in discouraging these emotional buyers, day traders, into selling if it fails to keep on moving. If it rests a while or sags, they become disgusted and hop onto another stock that will move and get hooked at the very top. Day traders. Very often the stock they have just sold will start up once more because its sponsors have shaken out unwanted bulls. Anyway, therefore, with these principles in mind, the selling climax in Anaconda, we conclude that stock is not yet ready for a purchase because it needs a proper foundation. It needs a count, all right? And that count needs to be enough to take out the resistance, all right? So if let's say you count, you're right here, 10, and the resistance is 15, should have more than 5 at least in order to project a move above, right? Above resistance. So we may try for a partway recovery to 15, but other stocks which do not have the barrier of an old supply are better candidates. If you have overhanging supply or resistance, why would you want to? Well, I mean, one of the things I look for is, if there's a resistance, and then qualify it by its volume, because I know that if it goes there, there's new shorts that are going to be there. They're going to be trapped. Longs that want to get out, it's not going to be easy to get out to advance. All right. So the above observations show how important it is for you to know the past history of a stock or a group or the market before you make a commitment in it. Even if you're scanning, and you're looking for a pattern or whatever it is that you're doing, you got to understand the history of the stock or history of the market. And one way to do that is by performing the analysis on it instead of just looking at for a pattern, right? However, to illustrate how you must handle your purchase or sales when your selections fail to work out, let us assume that we had none of the past history. Assume that we don't have it, just so for the sake of arguing and whatever. So instead, let's assume that that we had bought the day following the indicated climax. I mean, you had the climax right after D, you bought. All right. First, with the idea to make a trading turn on a possible normal correction. All right. So the idea is, oh, the climax is passed. The stock is in strong hands. There's a reversal right after it. Go long. We might get a halfway back bounce. All right. Second, the further objective of keeping this trade alive if subsequent action shows the building a foundation for a worthwhile advance. Should its action turn out the second way, we can let our profits run a little risky as we already have established a long position with a stop. So a couple of things can happen. It can just bounce halfway back, or like over here, bounce halfway back, or it can make a base, and that base can project a nice target. The stock rallies a little the next day, but the rally is sluggish and has very small volume and spread. This leads us to expect a reaction. Why? Because it has small volume on the green bar afterwards. So that's that little bar, the second day after the climax. This leads us to expect a reaction. Why? It's sluggish, it's weak. Another reason for expecting a recession is that the high point of the rally, the price touches line ABC. So he's taking a look at the trend line. He starts incorporating these trend lines. The line is drawn through the highs, etc., etc., etc. Okay, we should observe that should the price begin to move laterally between 10 and 11, or should it rally, say, 11 to 12, such action would break the downward trend line. All right, right. The only purpose of ABC, what is ABC? Is the trend line. The only purpose of that trend line here is to help us visualize the possibility of a break in the momentum. the break in the downtrend, which is very steep. The only purpose there, you're not just buying the break, you're not selling the break. What you're doing is seeing if that momentum changes, if that trend is changing. All right, it's what he calls the break of the stride. On 31st and 30, on the 31st, the price dips towards the climax low, but the light volume tells us there's no renewal of pressure. So 31st is like right here, right here. This it's 1, 2, 3, about 4 days after the D, point D. What does it tell you? Look at the volume. It's not there. What does that tell you? It's a secondary test. Secondary test has no volume. It has no pressure, which means what? Bullish. All right. So since there's no renewal of pressure, which was in effect previously there, right? The low is not likely to be violated. Why? Because to break levels, you need volume. Most of the time, you need volume. So now the same pullback here, the secondary test has no volume, and it's holding the low above the low. So chances are it's not going to break through the support level. When the price recovers, we conclude that the downward stride AB has now been broken, that the dip back to 10.5 has tested the previous low, and that since the reaction died out at higher support, the 5-day sideways movement represents the formation of a sufficient base of support or the development of sufficient demand to induce a further rally. All he's saying after that secondary test, you have enough of a base for, and the lack of supply on the secondary test, low volume secondary test, and enough of a base to do a projection for the market to move higher. However, volume remains constant and very small on the rally. What's the problem with the rally? It's a low volume rally, indicating that few buyers are timid and unwilling to follow prices upward. It's not attracting a following. What does that mean? Bearish. If we were observing this action today, we know what actually happened next. We should have to take this stand that everything will now depend upon how the stock behaves, either on the attempt to rally further or on the way it behaves if it should start to react again, as the small volume up on August 3rd suggests it will. In other words, observing the rally has been weak in point of distance covered with the relation to the July decline, meaning it's like a halfway back, and seeing that this rally failed to enlist any increase in volume, low volume rally, we are bearish or less bullish, suspicious of the bullishness. Such a weak rally, by dying out so close to the danger point at 10, creates the possibility that any outbreak of fresh pressure or determining selling drive might easily force the price through the critical low. What's he saying? Weak rally, so what can happen? Supply can enter. That's all. If you have a weak rally with pathetic volume that's sluggish, they got a problem. What's the problem? It's low volume. What can happen? More sellers. Sellers will see that and they will jump in. That is an indication for them to jump in. So it all depends on the reaction now. And what else is he doing? He's starting to measure it against the market and saying, "Oh, over here on this bounce here is stronger than the market bounce." So that's comparative strength. At the same time, this bop right here, that doesn't look right. It's not a breakout. It's very sudden and it overshoots. So what does that mean? He's wary of that, saying that it is possible that's hypodermic because A, look at the way it's how sudden it is, and it goes straight up like that. So he's wary, calling it hypodermics and saying that you just to be wary of that because it could be sold. So let us digress again for a moment to observe that had we acted on the on the indication of the buying climax on the ninth, saying that this is possible buying climax right here, by closing our long trade immediately, we should lost little or nothing because of whatever reason. All right, so he's identifying this hypodermic maneuver as a buying climax. You see right here where it looks like a breakout against this base, but he's saying no, this is a buying climax possibly because it's so sudden and I think and then if he was long he would exit on that climax. And what's interesting is it's just coming out of a base, so it looks like a breakout, but hmm. Let's say you wanted more evidence. You want more evidence. I mean, someone would say this is a breakout, someone would say it's a climax. What is it? Well, if you don't know that day, just wait for the next bar, right? And he says the prompt shrinkage in volume on the 10th and 11th, accompanied by narrowing down of the price movement as the stock recedes from the high, says it will probably try to rally further. It does, but on the 13th, a shortening of the upward thrust, accompanied by another rather pronounced volume surge, indicates bearish behavior. Where's the shortening of the thrust? Where's that little pop? It's right here. Right there. And the key thing is it looks like an upthrust. It just goes up and then reverses, right? The shortening of the upward thrust or the shortening of the up thrust or whatever, all right? And it has a little volume surge, but it has no follow through. And in this case, we are prepared for a reaction. Now the reaction on the 14th to the 18th, which is this here, is low volume. And what do you know about low volume pullbacks? They're also bullish and indications, right? Bull pullback on low volume means what? There's going to be another attempt at the high. You see, says on this reaction from 14 to 18, volume is very small and at the same time shows a tendency to taper off as the price falls back halfway to the support. This says the stock will probably try to rally again. That's what low volume pullbacks tell you. In the meantime, remember we have not disturbed the assume long position if you were long. Now again, he becomes suspicious. Why? Because this time when it tries to rally, look what happens. Right there. That suddenness or increase is telling him again there's something wrong. You know why it increases on the rallies and then has no follow through? This is a bearish indication. Probably this whole thing is being distributed up here. Because we know that you had distribution over here, then you have breakdown, then you have a climax, then this can be assumed to be this whole thing can be assumed to be some type of pullback action. And I believe that that's what it is. That it's just redistribution. The test. You have a breakdown, rally, low, pull back to this area of the test, about halfway, a little bit more. What do you have? Sideways action. What does it represent? Distribution. What else? Redistribution. This is what usually happens. Anyway, the point here is that shit is going down. All right. I'm going to stop right here. So what are some key things to note? One is that you have a range, you have a breakdown, you have an oversold condition where you had a climax, you had a secondary test. What happened in the secondary test? Low volume. What does that mean? That means that it is bullish and the climax and liquidation is complete. After that, it goes sideways, has a pathetic rally up here, but when it pulls back again, low volume, which says again, you go from bearish to bullish indications. What's the bullish indication here? The pullback on low volume. After that, what happens? It rallies, but the rally overshoots with this big bar that looks like a breakout, but it's not a breakout. It's actually a buying climax. What happens after that? It pulls back, but it's a bullish indication because the pullback doesn't have that much volume. So they attempt one more, creating that up thrust into that breakout area. And you'll notice that he doesn't say it, but you all know what happens up here, right? It's a test. That up thrust is testing. And you have volume increase there, but it has no follow through. So what happens? It pulls back. What happens on the pullback? You have low volume on the pullback instead of high volume, which means what? Retest. Retest happens, but it has a little bit of a surge and suddenness in volume, which is like basically they're sellers there. These minor buying climaxes are just they just increase the price a little bit, right, to look like an upthrust, and they sold into at resistance area. So I mean, all of this is just saying the same story. Bring it back up here to test and give good discounted selling prices and reach for those prices and sell. That heavy selling is in creating these little buying climaxes, and don't follow down, do another test, sell some more, and then finally break. Because I mean, in distribution, also you'll notice like many pullbacks, they don't have just one leg in that pullback. You know, when you have like A, B, C. Sometimes C o, is bigger than A and all of that. Sometimes it's in upthrust position. Sometimes it looks like a bull flag. Other times it looks like a pennant. But it's usually more than one leg correction. Why? Because one leg is typically not enough to do accumulation, reaccumulation, or redistribution, and that activity of reaccumulation, redistribution causes multiple legs, typically two legs. It would be one leg, like if it's in a state of momentum, then yeah, but typically you see multiple legs in the pullback, either ABC or more. I'm gonna stop right here. We'll pick it up tomorrow. Okay, bye. And yeah, this is 16M, page 11. You can read it yourself to catch up. All right, and follow along. Bye.